Hi, and welcome to Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running a small business. So today we're going to talk about keeping records and what to keep. Before I do, if you're new here, then please do take a moment to subscribe to our channel. That way you'll easily be able to refer back to this information if you need to, as well as finding other information that we have available on a whole host of different topics that you can find loosely catalogued in the playlist section of our channel. And if you are self-employed and you want to be kept updated with the new topics that we upload, then you should also turn on the notifications bell. So back then to record keeping. So this is a question that comes up a lot. A lot of people ask, what records should I be keeping? And how should I keep them? So we have covered elsewhere filing and the best way to organise your records, which essentially is in a way that you can find things. But what actually should you be keeping? Because depending on how complex your business affairs are, records can quickly grow in size, and before you know it, you can have a lot of paperwork. We also need to bear in mind as we're moving more into a digital era, what to do if the documentation is online. So let's first think about what you should be keeping. So as a rule of thumb, if you, depending on which taxes you fall within, so if you are not VAT registered, you have no employees, then you would just really be thinking about the records that you use to determine your profit and loss. So you would be thinking about your sales invoices and your purchase invoices and how you've calculated these. So those would be the things. If you are VAT registered, then you would also need to be considering all of the additional information that you may have used to be able to calculate the VAT return. So then you might start to think about, well, what about my supplier statements, for example, that I've used those to help me reconcile my supplier accounts to make sure that I've got all the invoices, but do I need to keep those? So really, those are just for your purposes internally to make sure that you've got all the invoices, but it's the actual invoices. If you are using software, then this will show the calculation of which invoices have been paid in different payments. So really, if you sort of think that actually the information that would be crucial to you in calculating your liabilities or your returns, that should help you to ascertain whether something needs to be kept or not. So your business, so your sales invoices and your purchase invoices, yeah, you would definitely need to be keeping those. Your bank statements too, because what they show is the money coming in, and they, in the event of inspection, they give the opportunity to demonstrate that you have accounted for all of the money that you have coming in, and that you have paid out the money that you have accounted for as allowable expenses. So your bank statements also would be very important. Now, if you are VAT registered, for example, and you have spent some money out and you want to reclaim VAT on it, you absolutely must have the piece of paper that shows that your supplier was VAT registered and how much VAT you've spent. But if you're not VAT registered, then you don't need to have a full VAT receipt, but you still do need to be able to evidence what you have bought, and you need to be able to evidence that it is wholly and exclusively for business use. So for that reason, for example, if you went into the supermarket and you bought some stationery for your business, then you would need to evidence that that money was spent on stationery for your business, and it wasn't spent on food for your family. So in that scenario, you wouldn't necessarily need to have a full VAT receipt, but you would need to show. So if you if, for example, you had paid for it on your debit or credit card, and your statement shows that you spent that money at the supermarket, that wouldn't in that instance be sufficient to evidence that you had bought something that was wholly and exclusively for business. But in the event that you have a specific industry supplier for your trade, and you can only really get those supplies from there, and you mostly do have your invoices, but you're missing one, and you don't have an account with them, so you can't get a copy, but you can see that on their statement, for example, or the payment going out, then in that instance, it perhaps would be more acceptable to not be able to show the exact thing that you've purchased. So really, that's if you don't have the invoice, there's always going to be a chance that HMRC will take a different judgment to you. So you just really need to make sure that the judgment you make is reasonable and not for ease and convenience, so that you're not just thinking, yes, well, I don't want to miss out on claiming this, and I don't have the receipt. That you're actually giving some thought into whether the evidence that you have does actually evidence that you have purchase something wholly and exclusively for your business. Now, sometimes people can become sort of very anxious if they've sort of started trading a little while ago, maybe been trading for a few months, and they've not been keeping all of the receipts that they should be. What I would say in that scenario is that it would be acceptable to document the reason why you didn't keep the receipts initially, and just make a point of documenting the point that you do realise, and start to keep them from therein. Obviously, if you've been trading for a long time, say several years, and you've only just realised that you need to keep your records, then again, and what you have to consider is actually, is it justifiable, your reason for not keeping them? And part of this would be how long it took you to realise, is that reasonable? If you've started trading and you've had a couple of months where you've not kept all of the records that you should have, but you clearly document how this came about, and you start keeping them from therein, then that is obviously a lot more reasonable than trading for years. Although, at the end of the day, at the point that you do find out, changing and making sure that you do the right thing from there on in is always going to be, sort of like a good argument to have. But you've got to obviously be making an attempt to do things right. If you just do nothing right and keep nothing, and then hope to claim that you didn't know, then that would not be acceptable. What I'm talking about is people that have just literally recently started trading, which is obviously overwhelming, lots to think about, and they don't realise straight away, but do actually pick that up pretty quickly as they sort of get up and running properly. So going back to the topic, So the things that you would be looking to keep without question would be your sales invoices and your purchase invoices or receipts and your bank statements. And if there is anything that you don't have, then you should go to the next best thing that you have to evidence it. And obviously, if you don't have anything to evidence it, then you would not be able to make that claim. You would not be able to include that. And one thing to bear in mind, because people will often say, well, I've been doing this for a long time and it's all been okay, is that self-assessment, which is the system by which you're notifying HMRC of your taxable profit, is just that, self-assessment. So just because your self-assessment has been submitted and you have paid your liability does not at that point mean that anyone at HMRC has looked at it. And at the point that HMRC does look, then if you are not doing things right, then you will not be allowed those items. And that could be quite costly to be claiming a lot of things that you shouldn't be, going back sometimes several years. So it's really important that you do it right from the start, that you only claim the things that you have the right records for, and then you know that in the event of an inspection, everything's going to be fine because you've done everything correctly. So just a quick word, as I mentioned earlier, as we are more moving into a digital age, a lot of things these days are sent digitally by email or logging into an account. The thing to remember with this, and again, I've talked about this at length in other videos, is that it is your responsibility to have the record. So if HMRC come along in 2 years' time and say, I want to do we want to do an inspection, and they're covering the records that you now are logging into to access, if for some reason, either because it's some sort of subscription and that's ceased, or the company stopped trading, for whatever reason, if you cannot access that information, then you don't have the right information to support your claim, and therefore it likely would be disallowed. So it's fine if your items are digital, but I would say that you want to be downloading those on a sort of regular basis, just in the event that you lose access to those records, because that will not be a valid argument with HMRC that you can't provide the records because you've lost access to something. They will expect you to have access to those. And so even if you are using some sort of software to digitally hold your records, then just bear in mind that you are committing yourself to that subscription for as long as those records need to be held. Because if you cancel the subscription and you lose access and you don't have the records, then there is a high chance that in the event of an inspection that they would be considered unallowable. And again, you know, HMRC are reasonable. They do have understanding of certain scenarios, but you know, it has to be reasonable. So, and it has to be proportionate. So say, for example, if you are just doing a very small amount of buying and selling through a sales platform, and you've bought something very small, and you have lost the receipt, but you have most of them, which is demonstrating that you do know what you're supposed to be doing and you are making good efforts to do it, then in the event of an inspection, it's likely that, you know, HMRC may accept that. But if you are actually running quite a big business with a high turnover, lots of transactions, and you have a large amount of missing items, then that wouldn't be acceptable, because it's not reasonable. Somebody that's running a business of that size should be expected to have taken the time to understand what they need to do. And of course, there is a lot to learn and a lot to remember, but if you are struggling, then you can always engage somebody's services to help you if you're not confident that you're keeping everything that you should or doing everything that you should, then you really should consider whether you need to be engaging someone's services to help you. There will be people that will help just to slot in with the things that you need help in, i.e. working with you so you can do some of the work, and they just kind of sort of do the bits that that you need help with. But as we always say, if you are engaging somebody's help, then please do make sure that they're qualified for the support that they're giving you, that they're a member of a professional body if applicable, and that they have indemnity insurance. And that is all just to protect you, because there's no point in engaging somebody to help you who's actually doesn't really have that much more knowledge than you do, because you're engaging them to be able to make sure that you're doing what you should do, but ultimately everything is your responsibility. So therefore you need to make sure, if you are engaging help, that it is the right help and it is actually helping you for the long term. So hopefully that helps you to understand. So firstly, what you need to keep. So anything that you would need to be able to evidence how you've come to your calculations, but certainly as a basic sales invoices, purchase invoices, receipts, and bank statements. If you're VAT registered, then you would need also VAT invoices to support any VAT claims. That if you don't have something, that you go to the next best thing that you have to justify or to evidence the purchase, and thinking about proportionality and does it really evidence. Of course, that's not the same for VAT. It would be, if you don't have the VAT invoice, then you don't claim the VAT, but it could be potentially that you do have enough evidence that enables you to claim the allowable expense, just not the VAT. And then also to consider, if you're keeping your records digitally, or if certain records are only available digitally, that you need to make sure that you do have access to that account for as long as as you need to keep the records, and ultimately that it is your responsibility to keep the right records and to be able to present them to HMRC if requested to do so. So hopefully this has been helpful, and as I mentioned, please do make sure that you're subscribed to our channel. Please do like the video if you found the content useful. And if you want to be notified when we upload new content, then please do also turn on the notifications. Thank you very much. Goodbye.